If we do see China depeg the yuan from the dollar, the purchasing power of the dollar will likely plummet rapidly, which is going to affect the purchasing power of every single American, at least who has stored their assets in dollars.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today we have a returning guest. We had him on about a year ago, Doc from SilverDoctors.com. He's a commentator on the precious metals market. His site, SilverDoctors.com and SDBullion.com, are a rich source of information for people interested in finding out more about what is happening and what the direction is in the precious metals market. Doc, thank you for joining us back here.
Oh, it's my pleasure, Dunnigan.
We've seen a lot of activity recently in the broader economic market, some pretty surprising announcements by some central banks around the world, and our listeners are often concerned about what does this mean to the individual person, the individual family, as far as what actions do they need to understand are prudent at this time to protect themselves from undue risk. So if you could help us, give us your perspective on some of the big events that are happening in the worlds of finance and economics, and then help us bring that home on what that means to the individual and the individual family.
Sure, Dunnigan. Well, we're recording this interview on Thursday, the 22nd. The ECB just earlier today announced their big QE, a little bit lower than expectations, but still a massive amount of money printing. We've seen big moves in the euro, and really what kicked it off was the Swiss National Bank depegging the franc from the euro. Saw an intraday 30% move in the franc. And as far as your questions, what does it mean to the average individual and, say, a mortgage owner or a homeowner? If you look right now at a large portion of Polish individuals, a lot of their mortgages were held by Swiss banks, and suddenly, overnight, they find their mortgage payments 20 to 30% higher due to the currency fluctuation. So that's just one example of how a currency fluctuation like this can affect an average Joe who really doesn't have any idea what's going on or what was coming and what impacted that. They just get their new mortgage statement and, holy cow, it's 30% higher in our currency.
Wow. I was just thinking that's not an obvious connection that most people would be seeing. And what other things are happening out there in actions by the central banks or these that are that you see being signs that people should be paying attention to as far as the overall risk profile and the progression of what's going on in the world's economies?
Well, really across the entire West, the race to debase continues. The Fed embarked on QE 1, 2, and 3, and now they're trying to pretend austerity now and that they're going to raise interest rates. Well, they haven't. And then we saw the Abenomics and just the massive QE announced in Japan, and now the ECB. And the Fed's QE is not over. QE 4 is coming, and it's likely going to be bigger than QE 1, 2, and 3 combined. Probably in the next 18 months we'll see it.
I noticed on your website there was an article by Peter Schiff to that extent, and I wonder if you could share some of the insights that are specifically relevant to that thing about future QE and what that means to the individual.
Sure. Peter Schiff is, I believe, predicting QE4 in this year, 2015, and he actually, in a Bloomberg interview this week, made some really interesting points that he looks for China to do the same thing that the Swiss did to the euro, but to our dollar. If we do see China depeg the yuan from the dollar, the purchasing power of the dollar will likely plummet rapidly, which is going to affect the purchasing power of every single American, at least who has stored their assets in dollars and not in yuan or gold or silver or another hard currency. So really it would result in a fundamental shift of purchasing power, moving it towards the east and away from the West and Americans who have benefited for several decades on the artificial support of the dollar, purchasing power-wise.
Yeah, so if you could then talk us through what you're seeing as realistic alternatives for the average person to consider when not wanting to expose themselves so fully to the risk of the purchasing power of the dollar going forward.
Well, real estate as well as physical precious metals, tangible assets or how you can do that outside of diversifying yourself currency-wise. Real estate, at least here in the U.S., is actually pretty high after it's recovered quite a bit, particularly farmland over the last 5 to 7 years. In my personal opinion, gold and silver have bottomed towards the end of 2014, and value-wise, they provide one of the greatest opportunities right now. I personally believe it's an excellent time to accumulate if you already own some, or look into protecting your wealth with the insurance of physical gold and silver. And really is insurance because there's no counterparty risk if you hold the physical assets in your own possession.
Right, and what is it about this time that you see in the gold and silver market? Could you kind of walk us through how you came to that conclusion? Because everybody wishes they had the crystal ball, but what are the main factors you see that lead you to conclude that the bottom of the price is in late last year and that now is a good time to accumulate? If you could kind of help people connect the dots here from what you're seeing.
Sure. I mean, bottoms are always a lot easier to call precisely, say, 6 to 12 months out. So I won't go on record and say I guarantee we've seen a bottom, but sentiment-wise, we were at multi-decade lows, and one of their indicator is the mining shares relative to bullion. The mining shares were at levels back seen over a decade ago, and yet we have gold trading, even at its low, around $11.30 an ounce, but trading around $1,200. Now it's up to $1,300, and the mining shares are just the sentiment across the entire space is just so terribly negative. Towards the end of 2012, the last couple of weeks, we just saw massive volume in the mining shares, which are basically the average investor finally rolling over and throwing in the towel, and smart money picking up shares for pennies on the dollar. And really over the first month here of 2015, both in the mining shares as well as physical gold and silver, there seems to be a sentiment shift across the sector. We have had pretty decent rallies in both gold and silver. Silver is about $4 off the lows now. Gold is almost $200 off the lows. So short-term outlook, certainly wouldn't surprise me to have a bit of a pullback here. And really it'd be healthy long-term, but personally, I think both gold and silver are going to do well throughout the remainder of 2015 as well as the second half of the decade.
I wonder if you could comment also on sort of just what people are observing happening in their daily lives of expenses versus what the official numbers have been saying. For about the past couple of years, we've heard that inflation was well under control and that the economy was going to be on a recovery path, but people were still seeing significantly higher unemployment in their communities, long waits for people to get jobs, and high gas prices, that sort of thing. And it seems like over the past 3 or 4 months or so, a lot of that has turned around to where people are seeing pickups in at least the surface activity of commerce in their areas, and lots of help wanted signs, and obviously the price of global oil and gas dropping down to half of what it was in some cases. Is this the sign that that the official figures were right all along, and in fact things are going well, and that the dollar seems stronger than ever, or is this just the calm before the storm? I mean, help people, if you could, to kind of put on those X-ray goggles and see what's really going on, and what are the fundamental underlying things that are going to carry us forward, rather than just sort of the surface effects you see at the moment.
Certainly. I mean, plunging oil prices are certainly not by any means an indicator of a healthy economy or even positive for the economy. They are a very big warning signal. The 2 previous times we saw a collapse like this, we had a very severe correction that followed. So certainly wouldn't be surprising to see the same thing. As far as your question on inflation, I just want to point out to your readers the difference between inflation and price inflation, because the true definition of inflation is the increase in the supply of money, versus when the average person thinks about inflation, they think about prices going up. But prices going up is the result of inflation, or the increase in the supply of money. And you can have price inflation in certain asset categories while you have price deflation in other asset categories, kind of regardless of the supply of money. So that's a very clear distinction that needs to be made. Right now, certainly we're not having price inflation in oil over the past 6 months, but we're certainly seeing massive price inflation in sectors such as healthcare and others, things like that. And over the past 4 to 5 years, we've seen significant price inflation in stock assets, particularly in the stock market is where a lot of the price inflation has shown up from the inflation of the money supply. We really didn't see massive inflation of common everyday goods across the board that many expected after the massive inflation of the money supply from QE 1, 2, and 3, because the banks, really all that money was not dumped into the economy. It went to prop up the balance sheets of the banks, as well as what we've seen in the stock market exploding from the lows from 2008 to 2009. So that's just one important distinction for your listeners to understand.
And summing that all up, if you could kind of give us your outlook for where you see gold and silver headed over the rest of this year, and what kind of a time horizon you think people have to take action if they're going to do so.
Sure. I mean, the sooner the better, in my opinion. The time to purchase insurance is before you have a house fire, not after. If you try to purchase insurance after your house burns down, it's not going to do much good for you. So there's a good adage for gold that's been said for quite a while that put 10 or 20% of your assets in gold and pray that you never have to use it, because if you do, everything else is not doing very good. So the time for precious metals, acquiring them, is really before you need that financial protection. And particularly, in my opinion, we're still we have bounced off the lows. Still, from a long-term perspective, we're well off the highs that we saw in 2010, 2011. So much better to enter your position or acquire the metal when you're not on a parabolic runaway chasing the market. It's really never a good time to buy any asset, is when you feel like you're missing out and you need to purchase it. So as far as the short to mid-term, really gold needs to get back above the 1600, 1650 level before it really begins to mount an attack on the highs seen in 2011. Silver, short-term, really needs to get back above $20. Silver has a lot further ways to go than gold, but I'm definitely positive over the next 12 to 18 months.
Over the past year that our channel has been in existence, we've had a number of different opinions from our guests of where they consider the safest ways for individuals who want to start accumulating precious metals, gold and silver, to acquire and to hold those. Could you, and we do caution our viewers that we don't give direct financial advice on this program. Our purpose is awareness. But what kind of advice do you give to people as far as what factors to consider when choosing where they should obtain their precious metals and how they should hold them?
Sure. One thing that I've always believed personally is that if you don't hold it, you don't truly own it. If it's not an asset held in your possession, there's counterparty risk. So that's something always to consider, is the risk of your counterparty failing, and as we've seen in the last few years, hypothecation and rehypothecation from the banks. That's one of the reasons we now offer our customers precious metal safes, because I personally believe if you don't hold it, you don't own it, and things are the safest in your own possession. But obviously it's an individual thing, and it depends on the value of your assets and your own personal situation. It's really not a black and white correct answer for everyone. Someone might have $5,000 in savings and live in a safe neighborhood, so their safe in their basement might be the safest spot. Someone else that might have $10 or $20 million in savings, they likely might not feel safe sleeping at night if they're sleeping on it. So those are some of the things that I've always believed, as well as really, if you do hold precious metals in your own personal possession, one thing I really advocate is don't tell anybody about it, because really that's almost as, if not more important than having a good safe, is being quiet about it and not letting anybody know that anything's there, which is hard to do sometimes.
Well, Doc from Silver Doctors, thank you for joining us today on Reluctant Preppers. And do you have any final thoughts in this new year of 2015 to share with our viewers about gold, silver, and the economy?
I just say to those who have been invested in gold and silver for quite a while to hang in there. I think over the next 12 to 18 months, we have some quite exciting times in store. So hang in there.
Well, thank you very much for joining us. We'd love to have you back.
All right, my pleasure, Dunnigan.